So you've been pretty positive on this market. Are you disappointed with the lack of enthusiasm we've seen for what has been pretty solid earnings reports?
Yeah, it's really strange. I mean, we're seeing the best earnings season maybe ever, 25% year-over-year growth in the 9th year of recovery, and companies are beating by 8%. But the market's response to this is far more muted than normal. Typically, in an average earnings season, if you beat on both revenues and earnings, your stock price goes up by about 2%. And this time they're going up by half that amount, only about a 1% response, which isn't very much at all.
Doesn't look like the Fed is eager to get too aggressive here. How important is the Fed policy for the remainder of the year going to be in determining how much this market can rally, if it can continue to rally?
I'm generally a believer that we overemphasize the importance of the Fed as opposed to the economic backdrop and the earnings backdrop. If the Fed does 2 moves between now and the end of the year, I think the market will take a little bit of relief in that process. There's, one of the concerns people have is that the yield curve looks like it's beginning to flatten out a little bit more than people would think. And so if the Fed is, like you said, not in a rush and does 2 this year, I think that's going to be good news for the market.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.